Good evening, ladies and gentlemen, and welcome to today's market wrap-up for Tuesday, March 11, 2008. I'm Joe Keenahan, Chief Derivative Strategist with thinkorswim. Well, here's a song that all the bulls were singing today. It was a very, very impressive rally today. The Dow up 416 points. E-mini S&P future up over $47. What an impressive day today was. Broad-based rally, amazing. The Dow, 29 winners, 1 loser. Boeing, the exception to the rule today. Every other stock in the Dow was up. Very impressive. It was amazing on every front. The VIX down 3 points back to 26.36. They barbecued options today. People were selling anything at any price. Very, very impressive. Strong showing. It'll be interesting to see now what happens for the rest of this week. Not a whole lot of numbers for the rest of the week, but we have to see what's going to happen. We're in a very interesting area. Tomorrow, Wednesday, a day to be careful. The reason being, it's futures rollover day. What that means is the March future is currently the front month future. After the close on Wednesday, coming into Thursday, June will be the front month future. So the traders are going to be getting out of their March positions, rolling them out to June positions. That day, usually there's a lot of strange movement involved with, so please be careful tomorrow. You could see some strange movement. Those of you who do trade E-mini futures or really any future products, please be careful tomorrow, as those movements in there can be, shall we just say, a little bit tricky throughout the day. All right, a few things we need to talk about. Number one, the levels we're at, 13.23 even on the E-minis. As we said before, we're still going with that 13.33 even as being now a big resistance number we're going to have to break through. In conjunction with that, we're going to have to go below 25 for this rally to continue. If that doesn't happen, which I have to be honest with you, I do think we need to test downside one more time. We'll have to see what happens there, but I'm of the belief that we will test this downside maybe around the 1260 area or something on the E-mini future before we continue the rally. The other thing I want to point out to you is Bear Stearns. Bear Stearns obviously been in the news, up 67 cents today. Rumors continue to swirl. What I find really interesting in that, the March 30 puts, $37 out of the money, still trading for 30 cents, and one of the heaviest volume options. There were 57,000 of those puts traded today. So you might say to yourself, why would anybody buy those puts? In my opinion, the reason you're seeing people buy those, they are already holding on to the stock. What they're doing, instead of putting in a stop order or anything like that, they're saying, you know what, we'll buy these puts. It's our way out if some really catastrophic news happens on Bear Stearns. If not, they're probably accumulating even more stock at this level. They're comfortable with the level, so they're buying puts just in case some really bad news comes out between now and a week from Friday, which will be expiration day. It's just amazing to me how the pricing in there is working. You're looking at the 30 puts trading for 30 cents to $30 out of the money. The 75 calls, 13, it's better. The 40 puts, $22 out of the money, trading for 65 cents. The 75 calls, $13 out of the money, trading for 65 cents. Which side do you think people are nervous on? About front month volatility and Bear Stearns? Still 138. I think it bears watching. All right, as always, this is Joe Keenahan, Chief Derivative Strategist with thinkorswim. Good health, good trading. Hope tomorrow's a great day. Thanks for joining us. Good night.